It's a very complex formula, but when you break it down, what you realize is that the complex formula really results in four groups of people. So I'm going to go through each group and you'll see which group you fit into and get an idea of your credit amount, because ultimately I'm going to show you tables where you can look up your credit amount broken down into the groups. So let's talk about those groups. So here they are, and the first thing that's important to note is that the groups progress from lower income to higher income. So from the left side, it's lower income people progressing over to higher income people. So I have my first group, and for this group, so people who have the lowest income, the higher their income, the higher their credit. Then I get to the second group. The second group has higher income than the first group. The second group, everyone within a certain range of income receives the same dollar amount of credit. Then I have the third group. The third group has higher income than either the first or the second group. And for this group, the higher the income, the lower the credit. That's why I put an arrow there going down. The higher income, the lower the credit. And then the fourth group, which makes more money than the first, second, or third group, they have higher income. Their income's too high to receive the credit. That's why the formula is so complicated, because it has all these different groups progressing from lower income to higher income. Here I want to show you, kind of graph it out. I love this chart. That's why I'm taking the time to explain this to you. This is a chart put together by the Congressional Research Service that really depicts graphically how it's calculated. And I've actually labeled, I've added to their chart, Group 1, Group 2, Group 3, Group 4. They didn't have those labels on their chart, so I sort of modified their chart just a bit. This is an example for a single taxpayer with one child. It doesn't really matter. The graph's going to look very much like this for other situations, like a married taxpayer with 3 children. So the gist of it is the same regardless. So here's the way this little chart is laid out. So look at the bottom, it says earned income, and it has earned income all the way over on the left side, starting at 0, going across all the way over, going up to $45,000. Now, back to the left side. Notice that as we go up the page, those numbers are the earned income credit amount, starting at 0, then going to $1,000, $2,000, etc., all the way up to $6,000. Here's the way it sort of graphs out. We have the first group, which they call the phase-in group, where the higher the income, the higher the credit. Then you get to group 2, which they call the plateau group, where everyone within that range of earned income gets the same dollar amount of credit. Then we get to group 3, and they make more money than groups 1 and 2, and they call that the phase-out group, where the more money they make, the less their earned income credit, so that line then is going down. And then finally you get to group 4, and they make too much money, and they don't get any earned income credit. So as you can see from here, it's not simple. It's not like there's a line going up, just one line going up, or just one line going across, or one line going down. You have these groups, and you're treated differently within each group. So that's what makes it so complicated. Now we are getting ready to jump in to the tables, go through the groups, and enable you to look up the amount of, or approximate amount anyway, of your earned income tax credit. I'll explain in a minute why I keep saying approximate. Keep in mind the dollar amounts on these tables are for the year 2020, tax returns due in 2021. I'm just saying that in case a couple years from now someone's watching this video and they don't realize that the numbers change from year to year, but they do. All the numbers get changed from year to year based on inflation. So these are the 2020 numbers. So the first group, remember I said the first group, the higher their income, the higher their credit. Well, the way this group works, the way the formula works, is that the credit for this group is a percentage of earned income. And the percentages for this group are actually the same regardless of filing status, so it doesn't matter whether you're married or single. And the way you determine your credit in this group is it's just a percentage of your income. and it does depend on the number of qualifying children. So look down the table and think about your earned income. So for example, if you have 2 qualifying children and your earned income is between $1 and $14,849, your earned income credit is 40% of your earned income. That's how it's calculated. Now, you won't actually do that calculation because you're going to go to the IRS table and look up the amount of your earned income credit. But I wanted you to know how it's calculated. So that's how it's calculated for this group. If you try to do the math and compare it to the IRS table, just be aware that your number's probably not going to match exactly what's in the IRS table because the table has income in $50 ranges. If they didn't, the table would be hundreds and hundreds of pages long. So they use $50 ranges, and so they do some rounding. So you may not come up, if you try to recalculate on your own, you're probably not going to come up with exactly the amount in the IRS table. So that's group 1. So here is a table, if you fall in group 1, that will tell you what your earned income credit amount is. Now, of course, I don't have every earned income amount in here, but I think I have enough listed that you can find a number that's close to your earned income and be able to then look across the table and based on your number of qualifying children, see what your earned income credit amount would be. If you make more money than this, don't worry, we're coming to tables later that will apply to you. Let me do an example. Let's make it easy because I'll go to the bottom row here. Let's say your earned income is $14,500 and you have 3 or more qualifying children. Your earned income credit amount for 2020 is $6,536. Now note, let's say your earned income is $7,500 and you have no qualifying children. You're not in the first group, you're going to be over in the second group. So take a look. If these numbers are applicable to you, just make a note of about what your earned income credit amount will be. Now we're ready to go to the second group. So remember I said the credit for this group is a specific dollar amount. And by the way, this group receives the highest credit dollar amount of any group. So the way this works, now it does depend on your filing status, whether you're single, head of household, qualifying widower, or married filing jointly. So you look in the table, you say, how many qualifying children do I have? And does my income, my earned income, fall within these ranges? If it does, and based on your filing status, if it does, go over to the last column. That is precisely the amount of your earned income credit. Because this group, they all get the same dollar amount, and so it's just easy to show what that dollar amount is. So let me do an example. Let's say you have 1 qualifying child, so we're on that row, and let's say that you're single and your earned income for 2020 falls between $10,500 and $19,349. Go all the way across to the final column. Your earned income credit amount is $3,584. So take a look. If your income is falling within these ranges, then this table tells you exactly what your earned income credit is. Hopefully that all makes sense. So that's the second group, that plateau group, where everyone within these ranges gets exactly the same amount of earned income credit. With that, we're ready to move on now to the third group. The third group is really complicated. I'm going to apologize in advance that it's so complicated. This group receives a smaller credit than the previous group. This is the group where the higher the income in this group, the lower the credit. Here's the thing. For this group, when we say income, it means the greater of earned income or adjusted gross income. The previous 2 groups just looked at earned income. They didn't have to worry about adjusted gross income. This group has to look at the greater of earned income or adjusted gross income. Now the way this works is, again, you look at the number of qualifying children, you look at your filing status. Look how complicated this is. Let's do an example. Let's say that you have no qualifying children and you're married filing jointly. What this says is that for every $1, look at the wording at the top of the table, For every $1 that income exceeds this amount, so in the case of no qualifying children and married filing jointly, $14,699. So for every $1 that income exceeds $14,699, the earned income credit is reduced by 7.65 cents. Thank goodness we don't actually have to do these calculations. Thank goodness the IRS has the table. This particular group, the calculation is sort of ridiculously complicated. I don't know, how does Congress come up with this stuff? I don't know. It is so complicated. But I don't think you're even going to try to do this math. Don't bother. Let's just go to the table. Now here, because there's so many numbers, I have divided the table between single head of household qualifying widower and married filing jointly. So first, we're going to do the single head of household qualifying widower. So you'll see down the side various income amounts. Remember, use the greater of your earned income or adjusted gross income to look up your credit in this table, and it's going to show you your credit. And you'll see that it's only showing the third group. So some of these income levels are in the fourth group, some have already been in the first or second group, because it's also complicated and it depends on your filing status, etc. So for example, if the greater of your earned income or adjusted gross income is, let's say, $30,000, you're single, you have 3 or more qualifying children, then your earned income credit is $4,408. That's how this table works. So see if any of these numbers apply to you, and it should give you an approximate idea of your earned income credit amount. Just pick a number that's the closest to your earned income or your adjusted gross income, whichever is greater. Now the third group, if you're married filing jointly. So the same kind of table, this is just the table for people married filing jointly. So again, your income is the greater of your earned income or your adjusted gross income, and then it's also dependent on the number of qualifying children. So take, for example, the income figure is $55,000, and you're married. This is the chart for married, and you have 3 or more qualifying children. Your earned income credit amount is only $383. Obviously, it's been phased way down because of your income level. Then we have the fourth group. The income for this group is just too high to receive the credit. If you make this much money or more using earned income and adjusted gross income, so really the greater of the two, then if you make that amount of money or more, you make too much money, your earned income credit amount is 0. So now I hope you have a good idea, an approximate idea of the amount of your earned income tax credit. To get a better idea, really a precise idea, go to the IRS table and look it up, because they have all the income levels in that table, whereas I've only shown the amounts in like $5,000, $10,000 increments.